South Africa's Investment Surge, Optimism Amidst Structural Reforms by Satori News. South Africa has entered a new chapter of economic optimism as the first half of 2024 saw a significant leap in the value of planned investment projects, according to information released by Nedbank. A thriving R$793.7 billion in new projects were announced in just 6 months, making it a fourfold increase from the previous year's R$193.2 billion. This unprecedented growth can be attributed to a variety of factors that appear to be syncing to bolster the nation's investment appeal. The transformation in the investment landscape seems to be intertwined with political and economic reforms within the country. Prior to the elections on May 29th, several projects were initiated, but it was the post-election government configuration that intensified business sentiment. The historic coalition formed by the African National Congress, partnering with the Democratic Alliance and others, brought about a wave of hope as the shared governance model is expected to foster swift and impactful structural reforms. These reforms are seen as the catalysts that will enhance business confidence, encouraging companies to push forward with capacity expansion programs. The government and public corporations are at the forefront of these initiatives, representing the lion's share of the announced projects. The private sector is also making significant contributions, accounting for a quarter of the total investments. Notably, a range of sectors are receiving attention, with spotlight projects across energy, healthcare, airport infrastructure, special economic zones, road rehabilitation, and water desalination plants. Such diversification indicates a holistic approach to the nation's development needs. This surge echoes President Cyril Ramaphosa's commitment to transform South Africa into a bustling construction site, aiming to invigorate an economy that has seen meager growth over the past 10 years. Factors such as logistical hurdles, crime, and corruption have previously hampered progress. However, the improved electricity supply, a notorious challenge that plagued industries with load shedding, hints at a critical infrastructural turnaround as Eskom's enhancement measures begin to bear fruit. Despite the optimistic outlook, Nedbank addresses the fragility of growth within this period of economic recalibration. The anticipated effects of this investment influx are projected to make a tangible impact in 2025, giving a slightly delayed but potentially substantial boost to the economy. The bank's cautionary stance also reflects an awareness of external threats posed by a tumultuous global economy, as well as the risk of local reform delays that could result in project deferrals or cancellations. Nevertheless, South Africa appears to be emerging from its investment doldrums. The current trajectory suggests that both domestic and international investors are starting to view the country through a renewed lens of potential, bolstered by political stability and progressive economic policymaking. The critical challenge now lies in maintaining this momentum and converting the planned projects into concrete achievements that will drive long-term prosperity. Thank you for choosing Satori News.